Alternatives in Canada, it's a really interesting time in the marketplace. When you look at the Canadian market in real estate, you've got a very developed traditional sector, so office, industrial, retail, multifamily. Alternatives really hasn't been invested in for the last 20 years. And so what you have in this environment where Canadian investors have very much supported the traditional sectors, and with that you've seen outperformance versus other markets, you've seen lower volatility, you've seen lower correlation to the US market than you would normally expect for a country right next door. All that's been great on the traditional side of things, but on the alternatives, we just haven't built anything. There is a tremendous supply-demand imbalance that exists in Canada relative to other markets in the world, which really is an exciting opportunity. So for example, in student housing, which is a sector which is, a fantastic sector around the world. You've got a Canadian market where university enrollment keeps going up. We're going to probably see a 5% increase on a domestic level in the Ontario market alone as far as new applicants over the course of this year for university. So you've got this strong underlying base of demand, but we only have about a 15% provisioning rate of purpose-built student housing relative to markets like the US and the UK where you're closer to 40%. We just haven't had that investment to date. But that's changing right now, and that's where the real opportunity from a Harrison Street standpoint stands. Why we opened the Harrison Street office 5 years ago was that supply-demand imbalance, and what we were hearing from our global investors was, we're kind of starting to look at Canada. We think there's places to put capital to work, and with that capital inflow, we're now seeing those alternatives accelerate as far as transaction volumes, both domestically and internationally. So from a Canada standpoint, 2 years ago we saw a 30% decline in transactions and then another 20% last year in the traditional sectors. The opposite is true in alternatives. We've seen a 30% increase in 2023, a 40% increase in 2024 to record levels, and already this year we're on pace to go up a further 40 to 50%. So alternatives becoming an area where people are focusing, and our strategy, my belief is the best opportunities are in the seniors and on the student side of things where there is a unique supply-demand imbalance, and we're well positioned to try to take advantage of that for our investors.